Hi, folks. This is Hyman from the Logical Investor, and I wanted to talk to you about what I'm seeing on oil and take a real big picture, 30,000 foot view of oil. This is the chart of WTI crude, which is West Texas Intermediate crude over the last, well, it goes back 40 years, but there's a few years not on here. So, call it 35 years or whatever. Um, and for the longest, oil would go between about roughly 10 and close to 40 per barrel. And then it broke out into this new range, this new dynamic. But the problem is that it got into a bubble. And longtime subscribers that have followed me through the years and other newsletters know that I've taught you that long ranges beget long, strong trends, and so that's what happened there. But it's like a trend that turned into a bubble, and so I mean, there's no reason why oil should have gone from 17 to 40 all the way to 147. Truth was somewhere there in the middle and probably on the lower side of the middle. But that's what bubbles do. It was an asset bubble that popped, and when asset bubbles pop, they can really take a while to normalize, like many, many, many years, and they usually don't normalize until a large ABC downtrend, which that's Elliott wave talk. It's a way that movements and downtrends and uptrends are measured, and Elliott wave principle says that there are three major waves down that a downtrend tends to take. And so here is A, here's B, and then here is C. So, in my opinion, the long-term downtrend in oil, where it was the most bearish, happened coming into 2016 and put in another long-term bottom. Um, Notice a couple of things just from the chart. When the price tends to get low and very far stretched away from its 50-week moving average, which is this blue moving average here, it tends to snap back to it and then some. So anytime that's historically happened, through the years, uh, there's been a big, huge snapback. Same thing goes for when it gets stretched far away from the 200-week moving average as well. There's this big snapback. So picture, the price being attached to these moving averages by a rubber band, and so one part of the rubber band is on the moving average, and the other part is on the price. There's an eventual snapback to it, even in extremes and with asset bubbles. The rubber band gets stretched a little further in an asset bubble, but it still pops back to these averages. And just like a rubber band tends to overshoot when it's stretched a lot, so do asset prices, such as oil and any other asset that would get in a bubble. Right now, Bitcoin's in a bubble, by the way, and it will end up doing the same thing. So, so to me, you've had a long-term ABC correction here. You've had a point of maximum pessimism where people are selling out en masse and giving up on oil, which is actually a positive because it's a contrarian indicator. Picture like in your mind, everybody that wanted to sell has already sold. Picture that, and it's not 100% everybody, but it's the bulk of them. And so when that happens, it makes it easier for the buyers to come back in and take back control. And where investors get it wrong is they want the news to improve and the sentiment to improve before they buy into an asset. But by the time that happens, for instance, here was a bottom in oil. I would bet you that the sentiment didn't improve in oil until it was like way up in here or something like that. So the meantime, it goes from 10 to 40 or 50, and so it's 4 or 5 fold uh, move higher before the sentiment actually changes for oil. And where people get big time enthusiastic about it and think that it can never go down is in this phase right here. It's the parabolic phase. Uptrends tend to have 5 waves higher according to Elliott wave. Here you go, 1, 2, 3, 4. And this one had a bubble extended wave 5. Most of the time, or not much of the time, wave 3 will be your longest, but sometimes wave 5 is, and particularly when it's forming a bubble. And so, here people, thought oil could never go down, and then when it crashed from 147 to 35, they thought it could never go back up. You know, and both were extreme views. Here was extreme euphoria, and here was extreme pessimism. And for years, the truth was somewhere there in the middle. And I think we're back at one of those pessimistic extremes again. So the height of pessimism in Elliott waves comes at the bottom of wave C's and also at the bottom of wave twos. So picture so say like this is a wave C and here's one, two, three, four, five, for instance. Um, so here would be one huge point of extreme pessimism, but also the first pullback within an uptrend, which is what a wave two is, can sometimes be just as pessimistic as the what in reality was the actual bottom, because investors feel like that it's going to continue on in the downtrend, and so these moves downward have produced lower lows all these times, and so they're conditioned to think, well, this one will be no different. And so in reality, it ends up setting up a higher low, but they're super pessimistic about it. And so even though it's a higher low within what will be a long-standing uptrend, they're sometimes just as pessimistic there. So wave C's and wave twos can be extremely pessimistic, and towards the tops of wave three and fives, you can have a ton of over optimism, particularly on towards the tail end of wave five, which is towards the end of the bull market. Uh, Everybody and their mama is bullish up here. The retail public, the people that almost never invest, they get enthralled with an asset way up here. You couldn't have paid them to buy it down here, but you can't keep them away from it up here. And that the retail public they're emotionally driven, and that's what keeps them being amateurs and not pros. And so they're just purely emotionally led on it, and they buy in overvaluation when they should have been buying in undervaluation. But you couldn't have paid them to own it here, and you couldn't pay them to turn loose of it here. So, and that's the nature of emotional, uh, the sentiment that takes hold of people. It's extreme fear here, and it's extreme greed here, and they're so emotionally jaded that they can't think logically. So, to give you a real life example of that, you think about, like, for instance, if you're married, when you and your spouse get into a fight, uh, you've gone from being you've likely gone from being logical, which is talking things through and talking things out, and reasoning and assessing and evaluating and compromising, to an emotional state, which is where all logic has gone out the window, and you find yourself being irrational and saying things you shouldn't say, and things that you'll regret later. I think when you're back to a logical, rational state, but in the irrational, illogical, emotional state, you say and do things that just don't make sense. And so everybody can relate to that. So that's why I give it as an example. And that same thing happens in markets. They get illogical and irrational towards tops, and they do the same thing towards bottoms. And you can't pay them to step in here and buy when they should, and you can't pay them to step out and sell here when they should. So they're always doing the wrong thing at the wrong time. So this is why you can't ever be led by what the crowds are doing, the masses are doing, what your friends are doing that aren't professional investors, what the media is telling you to do, because the media really picks up on trends when they're well into the trend and very mature. So if you're buying in when things are hot topics on the news, you can almost guarantee that you're buying something that's already overvalued. Um, and when your instinct is to stay away from an asset when they keep hammering it in the news and it's been down for a long time, you're, the amateur is very unlikely to step in and buy, and and that's a mistake as well. But anyway, so I believe we're at one of these pivotal lows back here, and coming into 16, like we were here, etc. I don't believe we're going back to some crazy amount on oil anytime soon. The 112, 114s, 147s, anything like that. But I do think over the next year or two, we could see 70, 80, $90 oil happen. And another thing I'd like to point out is when you look over the whole documented history of oil, anytime this 50-week moving average, in other words, after a downtrend, anytime this 50-week moving average turned up, it tended to be the the ultimate bottom, if you will. So here it turned the price bottomed in the nines, and this turned up later on. And even when it takes its first pullback here, it's in the 12s, and then goes on to 41. Um, Here's another turn up that that went from the 13s to 26s. Here's another turn up, went from the 10s to 36s, almost 37. Here's another turn up, 17s of course to 147, which was a bubble. Um, so here was a bottom and here was a turn up, and so it ended up going from 35s to 114s. And so here we are in another turn. So the price spiked low here, and then this turns up here. And so I'm expecting this to have, a run uh, to go to and overshoot the minimally the 200-week moving average here, which would put us anywhere into the 70s to 90s over the coming months to years. So so right now in oil, just zooming into, well, I tell you what, let me stay on a weekly chart, and I'll get off this really ultra long term time frame, and I'll zoom in on this. Um, so and here's where you can see the turn up more easily right here. And the last time we had this turn up, I mean, went from 33s to 114s, and note too that trends tend to last a while. 2 or 3 years typically. We're really only basically a year and a half into an overall move higher, and even if you're just in a short or a medium term bump up that still has one more leg down here, you tend to almost always get at least three major legs up, and if it's a new bona fide uptrend, you get five waves up. Well, here we just got 1, 2, and so we would have a leg like this still to go, and it didn't have to be as long, but once this pullback is done, I'm expecting another move up that could easily take us, to the 70s to 90s, very very easily on oil. So that's going to be bullish for some good oil stocks. Also notice the MACD keeps climbing higher, and that's a bullish sign. Um, the RSI keeps climbing higher, which is another bullish sign. So don't confuse the present negative sentiment with what oil will likely do in the future, or you'll probably be wrong. Um, so particularly the first pullbacks within the new uptrends. Remember, those are wave twos. So um, so I'm expecting, again, I'm not saying oil can't pull back a little further in the short term. It could, but I'm expecting oil to go 70s to 90s over the next year or two or three in the grand scheme of things, and go much higher. So usually at extremes, people have it wrong. They're overly optimistic here, they're overly pessimistic here, and we're back to a point. Again, this is so this is still in that trough, that long-term trough, and so anywhere in that troughing period, there is a state of over pessimism, and that rules the thinking of people, and it typically has them misjudging an asset, in this case oil, and they tend to be wrong in it. So anyway, that's my thoughts on oil. Just wanted to give that to you, and hope that was a blessing to you. And thanks so much for watching, and God bless. Bye bye.